probably oil is going to start to rise in price. I'm not going to predict if we've hit the bottom, but I do think that possibly in the second half of this year, we could see oil some 20 to 30 bucks higher.
Okay, so Lorne, if we look at the markets first of all, China's volatile shares have stumbled again, taking losses this month to about 25%, or we're talking in the region of 13 trillion yuan. But at the same time, the state's media are saying everything's fine, the economy's okay, don't worry. Now we do know that the double figures in terms of GDP those days are far behind us, but is 7% even still doable at present? What do you think?
Well, Monica, I think you've hit it on the nail there. China is definitely slowing and has been moving at a fairly good crack at about 10% for some time, and now it's probably somewhere just below 7. The market's really worried that it could be even lower than that, and so if you look at the stock market graph over the last, let's say, 5 years, you can see that over the 4 years leading up to 2015, the market was really following a trend of slightly slowing growth. But then in 2015, something happened and the market really just became really over-enthusiastic. And if we go to the next slide, you'll see that these are the price earnings for the period over the last 5 years. And they peaked in the middle of 2015 in June at about 26 times earnings. Now, everybody would know that if you've got a slowing economy and price earnings are at that sort of level, something's going to happen. And sure enough, the market cracked. And when it really decided to come off, it came off very heavily. There were a lot of speculative traders, there was leverage, and there were a lot of retail investors as well. And so that probably amplified the fall. If you look at where we are today, we've got price earnings at a much more reasonable trend line level of about 10.5 times. What does that say? We're probably back to a reasonable level based on a slightly slowing economy.
Okay, so we have spoken about historically and where these trends have been previously, but what about moving forward, Lorne? What are your thoughts?
Well, I think it's useful to have a look at a longer period than, say, the last year. And if you look at the sort of 20-year graph of the Shanghai stock market, you can see a trend line there with 2008 and 2015, two very big peaks with some very big troughs just after it. But if you look at the trend line over 20 years, you can see that, in fact, the story is that China is growing very fast. Maybe not 10, maybe not even quite 7, but it's certainly still growing. So if you look at the market and also have a view on how that economy is growing vis-a-vis the rest of the world, which is growing at probably about 3% in aggregate, then China is a growth story. And the correction is healthy. And you might look at that trend line and see that, in fact, the correction that's happened over the last 2 quarters and put us into bear market territory may now be getting ready to correct the other way and move back into the trend line, which is very interesting for anybody who's thinking of investing in China.
Indeed, the trajectory does seem to be on the right path, to say it the least. But we have, if we talk about the slump, we've seen quite a huge slump, but we've also seen quite a huge dip in oil prices. Are we able to draw some sort of connection from these?
Well, I think that the China story is also a global story. The world is just growing at too slow a pace. And so we've got soft demand. And so you've also got supply of oil. And there's increasing supply. If you have a look at, again, this graph of the last sort of 15 years, you can see that the average production per day is about 6.5 million barrels. Well, currently, we just peaked at about 9.7 million barrels per day. So that's a huge increase in supply. Now, anybody knows, it doesn't take an economist to tell you, that if you oversupply a market where there is weak demand, that the price will fall. And that's what we're seeing right now. But the good news is we've possibly hit peak production, and it won't take much for production start to fall away. In fact, the IEA has forecast that production over the next couple of years will drop from these kind of levels back down, not as far as the average of the last 15 to 20 years, but certainly some way back towards sort of 7 to 7.5 million barrels. What does that mean? Probably oil is going to start to rise in price. I'm not going to predict if we've hit the bottom, but I do think that possibly in the second half of this year, we could see oil some 20 to 30 bucks higher.
Indeed. Now, if we do look at the peg, the yuan, which has also been a huge talking point, some people say the peg with the US dollar isn't really sustainable. And when the day of reckoning comes for the peg, it's going to be bad. And, you know, it's really going to be, for everyone, is going to be negatively affected. How do you think this could play out, and what will it look like to your mind?
Well, I think your language covers it pretty well. If you have a peg and the peg breaks, wherever that is, whether that's the Swiss franc last year or another currency, when something breaks like that, it can create some big movements around the world. Will the politicians do something radical? I would hope not, and I think most markets expect that it will carry on as it is. There may be some further reductions in the cross rate of the currency, but probably it won't break. I don't want to predict it because politicians are in charge, and who knows what they're going to dream up in the next few months and quarters.
Well, there certainly does seem to be a lot going on, but Lorne, thank you so much for coming in and chatting to us today. It has been a pleasure as always.
Thank you.
Okay, well that's all from Lorne and myself for the moment, but keep on clicking back to Dukascopy TV. Goodbye for now.